All right, good morning, everybody. So we made it through day one of waiting on data. Like we spoke about yesterday, the anticipation is still hurry up and wait. It's going to be a sideways week where we could potentially expand a little bit on each side, but still hold the line until we get our data points. Here's the spot gamma levels for today. If you want to catch a screenshot of that. We were getting a little bit of a follow through in Europe and Asia, which was a follow through from us on yesterday's rally off the lows. So our market rallied up, closed high into the end of the day. That bled over into Asia, then into Europe. But now we've given that back, had a bit of a spill to the downside. We have a lot of Fed speakers today. Remember that we're not just listening for what they individually have to say, we're looking for a narrative. So they're going to do retail sales in Europe. It's going to be kind of a big deal. And then all of this Japan stuff, even though it's tonight, after our market is closed, it's kind of a big deal. You really want to look at what you're holding right now and ask yourself, are you comfortable with seeing the market begin to break down or break out? It doesn't have to be, a downside threat. So that when you were, say to come in tomorrow and find that we have gapped up or gapped down 3%, if you would be, comfortable holding on to that kind of risk. As you can see, China did have a nice expansion day, but they've given it back. So still a large level of sellers sitting up there, a lot of liquidity. For Japan, a really nice gap up. Right now, giving it all back. And Europe, which it's only 12:30 over there right now. Inside day breakout, gave it all back, and is just barely beginning to push against the low of the day. Just a little bit of wick down there. So we're looking at the dollar here. We had a little bit of resistance and some selling across that 102.5. Anything above 102.5 seems to get sold into. Sell the rip instead of buy the dip. The lower trend line held for the moment. Kind of want to put a little bit of a benchmark on this, right? It's not the idea that, oh, the dollar is going up, we expect the S&P to go down, or the dollar is going down, we expect the S&P to go up. We haven't been getting that kind of dichotomy lately. Instead, want to approach it from a different perspective. The dollar above 103 or the dollar below 101 would likely have an impact into the rest of the market, and try to approach it more from that point of view instead of, oh, it's going up or, oh, it's going down. A year ago, seeing it move up or down would have directly affected the indexes, but times have changed. We're not in that kind of market anymore. So you got to let that go. Focus on something else. So right now that 102 is going to be our line in the sand. It's basically a breakout of yesterday's low or a breakout of yesterday's high. That 102 held yesterday. I mean, we wicked through it just by a penny or two and came right back out of it with strength and conviction. Came back down there and touched it again already once today, and we again came up off of that level. So a lot of eyeballs on this, a lot of money sitting down at these lows ready to buy it up at 102. We want to see that defense end, or see that whoever's doing all that buying is sated and they've got what they're looking to get. Just remember, buying in the marketplace, in any kind of marketplace, doesn't mean bullish. It's a two-sided market, so people can buy to close just as much as they can buy to open. Yeah, Bitcoin did get above 30. It's one of our liquidity tells. NASDAQ, or say it another way, NVIDIA, Tesla, and Bitcoin are liquidity tells. We keep our eye on those all the time. That breakout in Bitcoin had a really nice follow through for the Bitcoin proxies like Riot. Riot is one of my favorites to play in that space. All right, a couple of auctions today at 11 o'clock and 1 o'clock. You know, these auctions, it seems like I'm really the only person who ever talks about them. And while everything has some impact or some merit, tomorrow's 10-year has a lot more of my attention than today's 3-year. I'm not going to say that the 3-year doesn't matter, but I mean, it don't matter. It's like trying to convince yourself that you don't have a favorite dog, right? That you love both your dogs equally. Yeah, right. You just keep telling yourself that. So tomorrow we're going to get the 10-year. We're going to get the FOMC minutes. It's going to be later in the day, with CPI being the big deal. That's going to be the number one, and then everything else is going to kind of come in later, including that Bank of Canada monetary policy report. And again, you know, that's going to have some impact, but will it have more than the FOMC minutes? And will either of those be able to counteract the CPI? We'll see. Now, I already had somebody reaching out saying, you know, let's put on some really wide trades, like some YOLO stuff, so that if we get this really big move from CPI up or down, we get paid. Yeah, I get the sentiment. Just, you're better off putting on those kind of plays when everybody says, oh, it's not going to be a big move. Right? Like, oh, we know the data, it's going to be in line. Nobody's really expecting anything. That's a really good time to put on one of those YOLO plays, because nobody's expecting it. But if everybody and their cousin's brother's uncle is all saying, oh, it's going to be a big move tomorrow, we got to go get some out of the money options, they're already priced in. Another thing about that anticipation of it being a big move is if everybody prepares for the big move, meaning they all hedge up, there likely won't be a big move. Because you got to think about, why does the big move happen? Well, if they're caught off sides, everybody starts buying all at once or selling all at once, and that makes the big move. They were caught off sides, and now they have to correct the problem. But if everybody already assumes it's going to be a big move and hedges, there's no offsides. They're hedged. They don't care what direction it goes at that point. It goes up, they'll make money. It goes down, they'll make money. Or they won't lose if it goes up, and they won't lose if it goes down. So you won't get the big move more often than not. When everybody says it's going to be a big move, probably won't be a big move. So tomorrow's CPI is supposed to be really big. Important wise, it's supposed to be a really big data point. Will we get a big move? So far, no, it's not looking like we're going to. So I got some levels here that I marked off on the ES. All I did here is measure the range through the Globex, and then plotted 100% of that range to the upside and to the downside. We can see when it finally did break out to the upside, it made it half of that range, and it shut down the move at that point. Going in the other direction, we've just hit half that measured move, and we are already pulling back off of that level. If we're gonna keep this sideways market until we get to CPI, then staying mostly inside of yesterday's price action makes perfect sense. Now we can expand just like we did this morning, right? We got just a little bit higher, but that's all we're going to expect, right? It's just a little bit higher, because that's where liquidity resides, is on the other side of the pivot. We tangle up into that liquidity, we come right back in again. There's every expectation where we're just going to hold the line to CPI. Now, that can change, right? Some Fed speaker today could say something that sparks us into a bullish market and breaks us out through the top. So it's possible. But base case, we're just going to stay inside of yesterday's price action. Play those levels to the downside, focusing on, say, the daily pivot point, which is an MDP at the moment. We haven't hit it. Yesterday's Globex low at 41.20. The ADR half at 41.07. Yesterday's cash open is at 41.05. So either one of those. There's a cog line down there as well. $41.06. And then yesterday's low, call it 4,100, and a full ADR at 40.77. We didn't get to it, but volume today still running under 100, so it's still showing a really light marketplace. And you can see where we normally would be by the time the market opens around 9:30. We'd be sitting in, the 160s, 180s, 200s. Yesterday, by 9:30 open, we had just barely reached 100. And it's part of that picture of everybody waiting until CPI. So sure, there's traders. A lot of it's going to be algo, because the algos don't care. The algos don't care about CPI. They're just going to trade. So there's still transactions. There's still activity. It's just going to be a lot lighter. Ten-day, 30-minute volume profile with TPO on the right side in blue. It's interesting again how we came down into that level, which threatens this air pocket, and we came up back up off of that level at 4,100. So 4,100 has a lot of defense. The reason I say it's strange because it's not a lot of liquidity. We're not seeing, like an iceberg or something down there. I don't have an answer to that, by the way, just pointing it out. We can see that we're spending a very, very small amount of time down there. So we're not hanging out at those levels. We've got no volume there. When we're at the top of this box, we expect to go to the bottom. When we're at the bottom of the box, we expect to go to the top. The point of control is with us. So it's a little bit of support. It's a little bit of a magnet. Don't lean on this thing. It's not a handrail. It's not something to trust. It won't hold the market up. It's not that kind of support. We have a VPOC from yesterday, although it's a long ways off. We'll call it 4107. We don't really need the one tick. And just remember there's a cog line at 4106. So put those two together, consider it a zone. 4111, 4107, 4106. And then the roundy at 4100. So there's a lot down here. And again, look at that low. Really light volume. And this low, really light volume. So whatever we're hitting down there, turning the market, flipping it over and running it back up the other direction, it's not a big, massive wall of buyers. My initial thought on this is that it's algo based, just like how when I was talking about the dollar at 101 or say the dollar at 103 and how that would affect the market. Consider 4100 as a trigger point. When the ES gets to 4100, some algo somewhere buys something. It could be buying options. It could be trading into the S&P, right, through the SPX or SPY. That it trades somewhere else and it's moving the market here. That's my base case. But what is being traded, right? That's the $1 million question. And it might not actually be the ES at 4100 causing the trigger that's flipping everything over. When we got to 4100, where were we in bonds and where were we in the dollar and in yields? If we were at a key level there, that might have triggered the reversal. And so it's not being moved because of volume here, of transactions here. That's a little too much nerd at 7 o'clock in the morning. really simple inside day. The play will be for an inside day breakout above 4150 with a run to 4175, maybe 4180. There's a lot of liquidity up here, or at least a lot of defense. Same thing if we get down around 4100, a lot of defense. Anticipation of range until we get through CPI. That's the game plan, right? So we can expand a little bit, go a little higher than yesterday's high, go a little lower than yesterday's low, but the base case argument is that we're going to maintain inside of this IX10 pattern until CPI tomorrow. It's a 50-point range from 4100 to 4150. It's a pretty tight range considering, the kind of moves that we make now. You remember pre-COVID when the ES moved like 20 points a day? Remember those days? I do. Ah, the old days. Back when we would sit in a trade for 5 hours to get 6 points in the ES. Yeah, do miss my iron condors. My goodness, yes. All right, we're still maintaining above that 10-week, which, makes perfect sense. It's the weekly, so it's not going to make really big moves when we don't move. If we stay put like we are, it will eventually come up and meet us, but it's going to take time to do that. We are slowly descending back towards that 10. We can see how each one of these data points is lower than the last. We're still 1.8% above the 10-week. And for the 10-day, same thing. We're slowly coming back towards that 10-day. We're still 0.5% away. All right, so it's a little noisy, but we're looking at consumer discretionary here on the far right. I just wanted to point out this really big outsized bar here. It broke outside of yesterday's low and then rallied all the way up to break outside of yesterday's high and close near the very high of the day. That's a real nice bullish recovery. But so was the day before, where it opened gapped down, fell a long ways, and then rallied all the way back up to close near the high. So that's the kind of recovery candle that we want. This candle right there. Really love to see those kind of recovery candles. But the next day, when we opened gapped down, that shut down the whole idea that we were going to, get above that 50 and expand all the way up. And I'm showing it on XLY, but it's the same thing, wherever you were looking at it. That's a really nice recovery candle. But when we opened gapped down, it shut down the whole idea that the follow-through day was going to put us, back up at the top of this pivot, which it could have done in one day. We could have closed at 145, opened the next day, and closed at 150 by the end of that next day. A nice 5-point move. But we knew it wasn't going to happen in the pre-market, so that we didn't even have to worry about taking the trade and then having to manage it and, dealing with risk. The trade never activated because we opened gapped down. Now for an intraday trade, I mean, yesterday was fine, no big deal. But if we were looking for that big $5 expansion, we knew it wasn't coming yesterday in the pre-market just because of that big gap down. Now, the way that I've got my charting platform set up, this hollow red candle might be a green candle for you. The one in the middle here that we're looking at this chart is Technology XLK. We closed up here and we opened way down here, which from my charting turned that candle red. Then we rallied up through the day and we closed here. Now, since we closed higher than we opened, it's a hollow red candle. But since we closed lower than the previous day's close, it's also red. On another platform, if you don't adjust it, if you open here and you close here, well, that's going to be a green candle. You closed higher than you opened. So this is looking at yesterday and comparing it to today, and it's looking at where we opened and where we closed. So it's why it's a red candle when yours might be green. So nice recovery on technology yesterday, but it's still an inside day. And the day that we're inside of, 4/6, is a really big day. Inside days aren't so exciting if they're inside of a big, massive bar. We want inside days that are in a really tight, like a spinning top sort of bar. Something that looks like this bar here. So this technology candle, XLK, is going to kind of represent just about everything in the market. Same thing with the ES that we were just going through. The expectation is that we're going to stay inside the box, stay inside the range, and we may wick through it, could get a little bit above it, but we're going to come back in, and we could wick down, get below it, but we're going to come right back in. And then finance, inside day breakout yesterday, finally, towards the end of the day, we have every expectation that finance is going to come right back into the box. Also, banks kick off earnings this week. So, really consider what finance has to offer if they get whacked again. The flows were kind of interesting in the NYSE exchange. Really strong flows, but we didn't get anywhere, right? All that work, all that money spent, we got nothing out of it yesterday. Keep in mind this lower liquidity very likely is going to be all over the place, not just here in the S&P. Lower volume offers an opportunity for the market to make big moves. It very, very often makes big moves in low liquidity. That's something that newer traders really have a hard time wrapping their head around. But if you think about trying to find someone to take the other side of your trade, So here's the dome on the ES. This could be, the same thing on Apple or anything else. It doesn't have to necessarily be the futures. These are resting orders, sellers above the market. And these are resting orders, buyers below the market. Normally we see these in triple digits. Every one of these ticks with a triple digit, and only one right now has that triple digit. So it's thin. One big sweep order of say 700 or 750 would move the ES through all of these, and we'd be up here somewhere in one shot because it's thin. But if you think this is thin, take a look at something like the NASDAQ, and this will kind of answer the question for why is the NASDAQ such a gappy bugger that just jumps all over the place. Well, the ES, while it generally runs in triple digits, this thing normally runs in double digits, and we don't even have one set of double digits. So a 10 lot order can move this thing 1 point. It's thin out there. So you take that same idea and apply it to, anything. Now, sure, the market's not open right now, so looking at Apple, there's no big size sitting here. But we can see already this morning, a few big orders have come through, right? Nothing extreme, just a couple of big orders. But it's really thin trading. So when we say the expectation is we're going to hold the line, stay inside of yesterday's range, maybe wick out just a little bit, and that it's difficult to trade in a range day when the whole market's on hurry up and wait, it's because of this, because it doesn't take much to move the market. So we can get sudden reversals, market flipping over and go in the other direction really quick, and then flipping right back around again to go the other direction. If you're losing more than you're winning, quit doing the hard stuff. Don't trade in low liquidity. And don't trade in the middle. I know it's a lot of don'ts, right? But if you get rid of all the hard stuff and you avoid the high risk areas, you increase your chances of winning. All right, so with the Bitcoin proxies this morning, it's not just BITO, which is that Bitcoin ETF. It's also GBTC, which is that grayscale Bitcoin. So both the proxies and the coin itself. So we got a proxies watch list, kind of. Riot, Mara, BITO, MSTR, Coin, even PayPal, Square. We're not seeing anything in it yet, but it also would include AMD and NVIDIA. Now, this list isn't something that I put together. What I did is I opened up the Smalls Exchange futures Smalls product. Basically, it's like a homemade ETF, right? And the ETF is a basket of stocks. So I opened it up and I looked at what was in the basket and I took all those names out of it. So the Smalls Exchange came from Tasty Trades. Tasty Trades deemed these names relevant to crypto, either through blockchain technology or by how much crypto they own, right? I don't know how they picked and chose each one of these names, but they were the names that was in that list. So when we see Bitcoin making moves, generally I come in and see, you know, is it across the board in all of these names, or is it more of a pick and choose? It's still pre-market, so a lot of these that aren't moving at all, that's just because they're little penny stocks and low float names, and they're just not catching bids yet, right? Because it's pre-market. So I mean, obviously not TSM, but you know, a lot of these just don't have on a day-to-day basis very much liquidity, so they're, you know, very likely not going to get traded in the pre-market. Why is that not showing in green? Hold up. Wait. It's just not reading the pre-market. Well, I don't know what's up with that. My trend spider normally has pre-market data. And I can see right here, it says pre-market delayed for some reason. I'll have to check it out. And that kind of puts that to rest. Pre-market delayed isn't going to do us any good. So we got this little bit of a head and shoulders. Measured move would say that we've almost completed that. There is a gap to fill on GBTC at 1874. Oh, 1868. So I would watch for a little bit of some resistance at that level, right? Just closing the gap. If we can get into that gap, maybe get above it, then there is another level to focus on. It would be the big bar here on the 9th of May from last year. So these are weekly candles. Weekly gaps are a pretty big deal. That'd be at 22.50. Okay, that'd be at 25. Must have log scale on. So even though Bitcoin's expanding, really nothing else, right? You can individually maybe go after the China ADRs that were getting whacked yesterday. KWeb, EEM, representing China names, very likely going to get a little bit of a push. Lay this out. You'll have your KWeb constituents. And then your Bitcoin. Semis got whacked pretty good yesterday. So what we want to see added to this list, that's what we already have. We want to see semis come in. And maybe the financials. Really start bringing this market around with confluence, right? That rising tide lifting all boats kind of thing. What else is getting whacked yesterday that really stands out? Energy. Yeah, we didn't get the recovery in this yesterday like we did across the board, right? Everything else fell down into those lows, found support, rallied off the lows to close near the highs of the day, but energy didn't do that yesterday. Crude didn't necessarily close at the low of the day, but closed pretty low on the day and has kind of continued to drift lower. So we're back inside of yesterday's range, just barely holding the line. I would add this to the list, right? If we want to see things kind of turn script and run the other way, semiconductors needs to be on that list. Energy needs to be on that list. There was an article that I read on, I think it was Bloomberg, it might be the Wall Street Journal, that dug in a little bit on the digital currencies on central banks. Remind me later, I'll hunt for it and send it to you. So if we're looking for that turnaround point, right? We've got the S&P and the NASDAQ kind of pressing against those highs. Or at least still sitting in the upper 25% of that run from yesterday. So we want to see a flip in energy. If we see energy coming up off of those lows and making a strong push to the upside, we want to see how that affects the market. If it's going to run with the market or against the market. In that same drive, keep your eye on the 10-year, the dollar, and the bonds. The bonds are still soft, squishy, weak. Put your word in. The best we can say is they're holding inside yesterday's range and that they're below the 50% mark. That's good for the S&P, but if our expectation is that the S&P isn't going to break out and rally today, then this shouldn't break out and rally today. We don't want to see it break down below that 115. So a rally in bonds should be a push down into the S&P. And the 10-year got back above that 3.3 level, kind of stabilized just holding like everything else, right? Everything is just holding its breath and waiting for the CPI report. So inside day, still the base case. We'll run with that until we have something else to run with. And you might find pockets that are doing good, right? Like Bitcoin or, the nat gas. There's always something. But I wouldn't expect a broad market advance. And for the names that are doing good, individual hand-picked, right? They call it a stock pickers market. Those names that are doing good are very likely going to rip to the freaking moon because they're the only ones doing good, right? So if you individually pick one or two names that are just bucking the trend and doing their own thing, on a day like this, you'll very often see some real outsized moves. Everybody will pile into the one thing that's running high on a sideways or a down day, right? So really something to consider, especially if it's one of two extremes. If it's a no-name Joe Schmo company with really light volume, that sucker can rip. And then on the other side of it, if it's a really well-known name with a lot of liquidity and two-sided trading, that can move, right? Because one side of the firms have really strict rules that won't let them just dabble in anything. It's going to need to be really liquid. And then there's the other kind of firms that are a little more rogue and cowboy that'll play around with those small, light, low volume, low float stuff. Otherwise, for the rest of the market, it's going to be toe the line, hold this everything together until tomorrow. With all these Fed speakers today, keep your eye on that Nick Tamaros guy from the Wall Street Journal. His Twitter is often a leak spot, right? So he sometimes has insight into things like an early CPI report. Something to think about. Even if it doesn't leak, very often they'll point to a behavior of a federal official and say, look at his behavior. He's acting like this. It must be good data or it must be bad data. And that might be a little bit of tea leaves, kind of reading between the lines, some Ouija board, voodoo doll BS. But we're looking for anything that hints that the CPI data is out before it's out. And I'll leave you guys with this. If we truly get a breakout today, right? Like not a fake out, but a true honest breakout, you won't miss it. So don't try to jump on it as soon as we get a new high on the day or a new low on the day, thinking, yeah, we're finally getting it. If it's a true, real breakout today, we're going to fly. And if it's a downside breakout, we're going to drop like a stone. So you don't have to jump on that thing just as soon as it gets a new high. Try to run it to the moon. If we truly break out, we're going to 41.71 today. So that's a 20-point range. Plenty of room. You'll see it in the ticks. You'll see it in that rising tide talk that we, rising tide lifts all boats kind of thing. It'll be finance, tech, industrials, consumer discretion. It'll be across the board. So it won't be subtle. It won't be soft, and you won't miss it. Otherwise, expect that any breakout is just a sell the rip opportunity, and we're going to come right back inside the box and wait for CPI tomorrow. Everybody, have a good day. Be careful. Be safe. I'll see you all tomorrow.